Every day, intercompany accounting is becoming a bigger and more complex issue for finance executives. Many companies now have multinational value chains and a high volume of intercompany transactions, sometimes dwarfing external sales figures. In fact, data shows that roughly 28% of global gross reports, totaling $5 trillion, is actually double counted. First counted as value added when imported, then counted again when exported as other products or services. At the same time, companies are being held accountable to new global accounting and tax regulations, including BEAT, the Base Erosion and Anti-Abuse Tax. Yet against this backdrop, some organizations continue to downplay, oversimplify, or even ignore their intercompany accounting issues. And turning a blind eye can have significant consequences, including hefty fines, financial restatements, and even lawsuits. Thankfully, there is a better way to manage intercompany accounting. What if you could centralize and streamline intercompany accounting across tax, treasury, and finance? You'd be able to reduce complexity and increase efficiency while managing both administrative costs and the likelihood of unintended taxable events. You'd also be better positioned to prevent intercompany accounting problems before they lead to fines, penalties, and bad PR. And these are just a few of the potential benefits. Picture this. Your large multinational organization has decided to acquire a company, one that will add multiple new legal entities throughout South America. Now what? You need a solution that can enable you to manage this type of change. With the Deloitte Intercompany Framework and BlackLine supporting technology, you can quickly incorporate new entities and create, review, approve, and reconcile intercompany transactions and balances across all currencies and geographies in real time. Our intercompany accounting framework covers the relevant accounting, treasury, tax, legal, and business considerations associated with intercompany transactions. Based on extensive research in a wide range of companies, we have identified a set of leading practices for each of the 7 components of this framework. These practices address the common pitfalls associated with intercompany accounting, including insufficient use of technology, non-standardized processes, and difficulties with transaction matching and account reconciliation. Implementing these leading practices can help your organization mitigate the challenges of intercompany accounting and bolster the effectiveness of supporting technologies. This is the BlackLine Intercompany Hub. It's a powerful cloud-based technology that fuels Deloitte's intercompany accounting framework. Let's take a look at some specific features. With the Intercompany Hub, entity transaction and governance is controlled by the business, not IT. You can govern trading relationships by entity and transaction type, and configure rules for invoicing, currency, and netting. The Intercompany Hub enables you to streamline transaction processes with intercompany agreements. So that means you can more easily minimize disputes and out-of-balance situations between entities. It's a broad platform designed to manage all transaction types. For example, you can fully automate driver-based transactions, such as allocations and cross-charges, using master scheduling and threshold triggers. You can import transaction-level data from any source system, making it simple to import transactions for validation and export them for balance completion. You can also initiate and schedule transactions based on established trading rules and agreements by entity and transaction type across all platforms. The Intercompany's Hub's global subledger matches accounts receivable and accounts payable detail, and that gives you the ability to proactively manage out-of-balance situations, make adjustments, and streamline your global financial close. With the Intercompany Hub, you can also streamline settlement processing using matching and automated foreign exchange gain and loss adjustments. The stakes are getting higher. Intercompany accounting is becoming more complex. Regulatory scrutiny and enforcement is on the rise. And companies are realizing that their systems and manual processes can no longer keep up. If your company could transform intercompany accounting, what could you achieve? Efficiency, accuracy, visibility, and most importantly, peace of mind.